The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday through Friday, Eastern Time, market hours and market days. This is the 10th of April, and we're looking at a really strong market. For subscribers to my opening call, we've been anticipating that there'd be a bounce, and a pretty strong bounce, and we were trying to play that bounce. Still we're out of the Dow short position and the long position. We just missed by 0.01, getting back into our very strong long position in the Dow this morning. But we have something else that's actually got an even better percentage gain, which is fine. So within that context, we're looking at the E-mini up 34 cents. Now, this is very interesting. Look, there's that arch pattern. There's the peak Ds we talk about over and over in the Chapman wave. Peak D on the 29th of Jan at 28.83. Peak D again at 28.07. Comes down to a trough D at 25.52. Attempting, with all that noise that came along yesterday, it's attempting to break out of this pattern and get into the 2700s. My thinking here is that there'll be another arch formation, that we've got a little bit more to go. 25.52 to the high of a few days ago, around about 26, was it 60 something? 26, I think 70. There it is, 72.25 on the 5th. I think we're going to be going above that. And now it might be a little harder since we've got short covering going on yesterday, and then the shorts turned out to have covered too early because the market suddenly gave back over 400 points. And then you get overnight, you get this incredible story. So within the context of the macro intermediate term, I still believe that we're in a sell mode in the daily and weekly Dow, S&P, and Index 100. That's the comp index as well. And these are bounces, very important. I believe it's the same thing for the semiconductors. Semiconductors should have a little bit more of a rally here because they've been really beaten down. So let's just go through this very closely. The E-mini 120-minute chart has this Chapman wave left side, right side price time match. Had to extend a little bit to the right, and it says by tomorrow, by 8 o'clock tonight, early tomorrow morning, should be an attempt, excuse me, to sneeze, to get to the 26.72.25 high of the 5th of April. And there's the inside wedge, upside track. Thank you very much. Green, this should have been green. And make it green is what I show my subscribers every day. Actually, let me just do this. I never take time to actually say what exactly do I do for my subscribers every single day. So let me go to this. We've got, first of all, early in the morning, I start sending out charts, but I also send out by about 7 o'clock-ish every day. I posted in the den, but I also sent to subscribers the E-mini, the expectation on what I'm expecting. Here's the daily, here's the weekly, and here's a 120-minute chart. There was that inside wedge target line that I proscribed, and here it is in real life. Where did it go? Right there. So we've gone that almost that entire candle. Going back to the story, if I can find it right here. I also showed the Dow, the daily. There it is. So this is the daily chart, and I said that my preference right now is to go for the cup formation, and there should be a rally towards the upper side. And I didn't talk about this in great detail, but I did mention yesterday that there was, first of all, we've had a couple of days of the Chapman wave trend gauge hitting it just right 100%, and we had that sharp rally yesterday. Now what we're looking at is that on the pullback, there was another oversold condition, and that was really a news-related thing. We should actually have closed up way over 300 points yesterday and had an extension today of 500 points. So we're getting that right now. The Dow's at 464 points. But this is very important. you're going from the H pattern, and now you've got a cup pattern, and that's what we're looking at. What I'd said is that MACD was holding quite well, and the stochastic was rallying, and the on-balance volume was rallying, and that was a positive. So there was actually a positive divergence. That's the daily. I also showed something very interesting right here. Where did it go? Right here. So this is the 120-minute chart, and what I did is I took out from yesterday the arch formation. Today I said that we should have the arch on the left side, and this cup formation is way stronger, and that there's a chance we should be heading towards this dashed line, this dashed red trend line resistance, and the 200-period exponential moving average, the orange line right there. And also that there was this pullback yesterday, late yesterday, in the 120-minute Dow chart should try to get us back over the 9-period moving average. That's kind of what we get. Plus, I showed the charts of the stocks that we own, what we're looking to buy, etc. So it's a very detailed report every single day. Now, let's get back to our story. So within the context of the markets, we're looking at the Dow up 437 points at 24,417. And there you are. You're right on that dashed. I'm going to get rid of this because we're out of that. Took out profits in the short position there. Although I was a little upset. I would have liked to have had it. I don't think we're going to 25,400. But we did get taken out Thursday, a week ago. I did not remember that. I thought I'd lowered the stop by 10 cents. Doesn't matter. We're out. We'll have to deal with that. So we missed buying today. Rebuying from yesterday with a nice gain, not as good as it was intraday, but a nice gain nevertheless. We missed it by a penny because with the low of the day in the instrument we were trying to use, that was exactly 1 penny away from what I said under that number. So what can I say? Some people did have an email to say, yep, we're in. We didn't want to mess around over a couple of cents, but I'm very strict with ins and outs. So we did not officially get it. So here it is. The Dow is rallying, and I think that there's a chance that we're going to take out this resistance line. And what's really important is that the weekly chart is finally seeing some strength in the stochastic, not much in the MACD. Here's the 120-minute chart. I need to get rid of that because we're done with that for the moment. Let me just get it out the way. Yeah, there it is. So what happens in this part of April is going to be very important because the greater the chances are of a move higher, the greater chances are of the 9-period exponential moving average holding in April, and that is 23,900 is the key support. I suspect in April we will be testing it at some point. We'll see. Okay. So in the meantime, back at the ranch, you've got the S&P. The S&P is up very sharply. S&P up right now is up 41.57 at 2654. This is a slightly different pattern because it did not take out the left side low of the February the 2nd low or 2532. Look what's happened. It hasn't even made a leg B. I think it will make a leg B. And then the pattern that I would now draw is, since this is now the arch formation, we're in another kind of a mini arch right here. I think we're going to try for that. Try for the 2692, maybe 2702 level over the next 3-5 days, maybe into Friday, maybe even Monday. We'll see. So in the meantime, back at the ranch, this is a nice bounce, but the MACD is only just turned positive, and the stochastic's not very good at 38%. I'll be back for all the other indices. Basil Chapman time conditions are Dow 430, S&P 40.
Would you like exposure to the foreign currency markets without any downside risk to your principal? Then consider the Petrocurrencies Market Safe CD from Everbank. This 3-year U.S. dollar-denominated CD leverages the performance of 4 equally weighted currencies from these top oil-producing countries: Brazil, Canada, Mexico, and Russia. This CD features a 200% leverage factor, which means that your potential upside payment will be double the currency's average performance at maturity with no cap if the currencies increase in value over the CD's term. And if the returns are negative, your principal's 100% protected. Returns are based on CD performance with no correlation to the price of oil, and there is no annual percentage yield or periodic rate of interest on this index CD. The April 19th funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. This advertisement is sponsored content. Everbank is a division of TIAA FSB, member FDIC.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi folks, so this is a story on the QQQs. 150, 160 as we speak, 160.01, 160, 159. Okay, so it's just kind of stuck here at up $2.27. And one of the things I'm looking at is I believe that time and price is needed in the QQQs. They've had quite a bit of price so far, but I think it's going to be more time and then more price for testing to get to the 150.13 low of February. Whoops. 150.13 low of February. And the QQQs is the NDX Power Shares Trust Series, NDX 100. Made a high of 175.21 on the 13th of March, has pulled back very sharply. The previous decline was an 18% decline. So if you add them up, it's going to be very important. I don't think it has to smash to the downside. I think it's more time than as it comes back to try again for that 18. It'll be more than 18% because it went from 170.95 to 175.21 from January the 26th, with the down the S&P made their highs. It dropped 18% and then ran all the way to 175.21 from 150. So that's 25-point gain. 25-point gain is about 23% or 25%. So it has a big gain, and then it runs up. Did I miscalculate that? Yeah, I did. And then it runs up to the 175 level and then turns around at a peak D in the Chapman wave, has an island reversal and comes all the way back to 153.88 just a few days ago, about 5 days ago. Now it's really struggling, and at this particular point, it should also, like the down the S&P, they haven't taken out that peak A that was made on the 5th. So I'm suggesting to you that the Qs are much weaker, that the semiconductors are ready for a pretty decent bounce. They're getting a nice bounce today. But these are the areas that are going to falter sooner rather than later. Now, what's really important about this whole aspect is that the semis are up 2 at 102.16. This is one of the deepest corrections they've had, from 114.55 down to the low that was made of 99.10 on the 6th. Let me just type that in so I don't have to keep checking it out. 99.10 did not hit the 200-period moving average of 97.46. That's still to come. And what I'm thinking right here is that you need time and more price in the semis. And if everything I'm hearing is correct, all the applied materials, Lam Research, many of them are projecting a really strong year this year, 2018, and they had gains 30% or more last year. That's really unusual, actually even more in some cases. That is so unusual that I suspect that the semis are in for quite a bit of a respite in time and probably in price. That's just my guess. I have no idea. I'm just guessing. So, okay. So I did that. Okay, QQQs, let me just give you parameters. QQQs should try to hit 104. I didn't mean 104. 164. Nah, I don't know if I can get to 164. I already have a target of about 161 to 163 as a counter trend bounce. And it might not even be as strong as that because really it's in the Qs that you're seeing the most work that needs to be done after being leaders for so long. They just need time. It's an embarrassment for them. The Qs just need some time. That's all. And I suspect that the 163s, if there is a further continuation of the rally to the upside in today, late today, into tomorrow and Thursday, that's kind of the area that I'd be looking at. We are hoping to remain in our short position, less than a point from the all-time high based on the peak D in the Chapman Wave 120-minute chart, and then the following day was a peak D in the daily chart. So it gives us a little leeway. That's all you can ask for in this business is some leeway, and that says I'm going to be holding the shorts a lot longer. We have taken a 22% gain, a 35% gain, and just a little bit off in both cases. Now, what I am looking at here is if you look at gold, gold is trading up just $2. I say just because technically, if it was going to break to the upside, you want to see this downtrend line right here of 1350. Let's call it 1350 to the resistance at about 1356. You want to see that taken out, and it needs time. It needs speed to do that. And basically, you want to see the high that was made on the 27th of March of 1362.6. You just want to see that left in the dust as this thing makes a cup formation in the weekly chart, gold, and trades much sharper. But if you look at the EUR USD, I'll get to silver in a minute. If you look at the EUR USD, it's trying to rally. It just doesn't seem to be able to get out of its own way. But it's holding beautifully if you look at the weekly chart and the monthly chart. But now if you put that together with the dollar, look at the dollar DXY, the dollar at this particular point coming back a little bit from the 3 days, 3 down days, down 12 cents at 89.73. I'm inclined to think that the dollar is trying its best to break out to the upside into the 91.20s. Hasn't done so far. We'll be watching this closely. And if you look at silver, SI, continuous contract, where did that go? Right there. That is a nice candle. This is the first time I can start to say, you know what? I'm looking at the silver chart, and this is the first time that it actually, in a sense, I wouldn't say it's leading gold. Let me just show you. Keep your eye on the left side chart, right? Left side chart's the daily. And we're going to go back to the GC. Keep your eye. Here we go. You know, it's a stronger chart because this move in gold, this huge move, and then to give it back is really never good. But in silver, it has steady green candles. In fact, if you just glance at it, the big green candles are not as deep as the red ones, but they're more frequent. So silver is trying to hammer out some kind of a bottom. I just don't know if it's going to do that. I think it's still going to be time that we're looking at. So, okay, silver. Now let's go to high-grade copper. High-grade copper. In leg C on the upside. Very nice action to Dr. Copper. Copper is up. It's at 3.13. It's in leg D. Very nice. Now I have to put an up arrow instead of the plus sign because in a buy mode. Weekly chart is improving. It's not great. These candles on the way down. If copper is able to get to the 315 to 316 area over the next 2 days, I'm going to have to say, hey, that's a good sign. Put it together with wood, which is the iShares Timber and Forestry ETF in leg D right now. I have to say to you that as an economic bellwether. We're looking at copper saying, maybe I'm not out of the game just yet. Maybe I'm holding a lot better than people thought. So wood, which is the iShares, as I say, Global Timber and Forestry ETF, leg E in the weekly, leg D in the monthly, and a leg D in the daily. Hey, we're going to keep our eye on this. HGX, which is the Philadelphia Housing Sector Index. Not good at all. Down, it's up 1, but it's really down from the big candle that we had the other day. Doesn't look so great. I'm missing I'm missing crude oil. Oh my, I had all these emails there. Crude oil. Crude oil is up huge. It's up 1.83 at 65.25. So this is the pattern that we were looking at, and it's just, okay, I'm going to finish up this pattern here with the channel break. Whoa, that is very good. Good action. Good action to crude.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
So I'm just showing you the cyber stocks here. This is the Bitcoin. Remember the H pattern? I said it's deadly. Not only that, I said all those talk for the first 2 months of the year about 40 and 50 and 60,000 for Bitcoin. I said I just cannot see it. I think that it needs more time. It needs to build a base. You need to get everybody out and totally disillusioned. Nobody even talks about Bitcoin, and then you'll have a pretty decent rally. I think we're getting closer and closer to that, but I don't know if we're just there yet. Probably what you'll need to see is one big spike, say, oh, Bitcoin's back, and then another retest with maybe without taking out 6,000 key support. We'll see. Okay, I don't trade it. I'm not that interested. There's enough in the market without Bitcoin. So crude oil, beautiful big candle. I want you to draw in the down channel, spiked above it. MACD is, okay, it hasn't crossed positive yet. Stochastic has turned around. So either the stochastic and MACD are going to go to overbought levels. They're not even close to overbought right now. And that's going to push crude up. Or this is just an aberration that says there are two news events that came out between yesterday and today. And that's really exacerbating the oversold condition on the shorter term. And that's why there could be a little bit more. I'm really watching this closely. Why? Because it's that monthly chart that's really improving a lot. So we don't have a position in crude, but I am starting to look at the oil services area. We might start taking a position there maybe tomorrow. We'll see. In the meantime, there was a sudden slide in the Dow. Dow's now up only 307 points. S&P's up 30. So, yeah, let's go on. So you got crude oil. Now I'm going to take just a moment here. So, wait. Let me finish the story. The TLT is trading down 20 cents. This is the whole thing with bonds. If you look at the bond chart right here, yields are still pretty much at a high level consolidation. Haven't broken down. They haven't broken out. They're just consolidating huge gains. So let's just say yields are consolidating for now. There'll be a big move. We'll talk about it maybe tomorrow. I don't see it just yet. Now, what's really important is that there's an oversold condition in the general market. There are certain sectors that are now going to start. If you look at Exxon, I said Exxon, I don't see anything yet, but if it can go from the lower end to the upper end, maybe that's the way to trade it. Now it's going towards the upper end again. It's in leg C in the daily at 77.33. That was a nice breakout from yesterday's pullback. So maybe it's in play. Is it in play for a whole 3 months to be able to get a dividend yield on when they pay? All I'm saying is that CVX and Exxon, CVX was strong. I spoke about that recently, and it's in a leg gray AB. It's in a leg C to the upside daily, but it's also in a leg B in the weekly, which is improving a lot. Chevron looks a lot better. COP, I think, is the one that I was asked about. ConocoPhillips the other day. I didn't have a chance to do much with it, but I did draw it in and say that, I don't know if I did that on the show, but it had a left side, right side price time match, and now it's in a new leg. I have to call this not G, but a leg C. So ConocoPhillips is probably the stronger one of all of them. Don't know if it has the same kind of dividend or anything about it on a fundamental level, other than to say the chart is a lot better looking than the Exxon or Chevron chart. In fact, I'm going to make it just a note for myself right here. COP trading at 62.60. All right, now we can get to the nitty-gritties. Boeing was the first question. Boeing, where did that go? Oh, they went onto the chart. No, type it into the little rectangle. There we go. I'm still convinced. Boeing's up $9. I'm still convinced that Boeing needs a rest. Oh, there's a lot of talk about new product now. 797. What is it? 7 something else coming out. I still think it needs time. I'm not putting it on. I wouldn't even be thinking of shorting it. I just think it needs time. So that's all I'm saying there. Boeing needs time. It's trading at 331. Yeah, it could bounce to the 340s. Actually, if it gets to 348, it's used up its time and started to rally very strongly. Right now it's at 331. I don't think it's going to 348 anytime soon. I think it's just stuck in this range. Next question I had was, did the S&P make a quarterly low as it did on the second Friday in? Oh, wait. Friday in April of 2000 and in 1997. You know, there are correlations that are going on right now. My mindset is not to say that we have a 2007 type failure or a 2000 March high type failure in the S&P or the semiconductors. I'm watching the monthly charts really closely. At this point, I think it's just a well-earned, well-deserved rest period. That's all I'm going to say. I don't want to. The cues, I think, going to take more time. That's the most important aspect. Good question about the VIX here. I spoke about it for subscribers this morning. I said the VIX is actually holding pretty darn well. Even now, it's only down 71 cents. It's at 21.06. Are you kidding? We've had a 400 and something point move yesterday. We had over 400 point move already today, and the VIX is only down minus 3.26%. I think a lot of people are buying insurance, and one of the reasons why I think they're buying insurance is if you look, remember I spoke about this just starting from the January 26 high in the Dow and the S&P. If you look at this on a, oh, I got a caller. We got Dan in Atlanta. Dan, how are you?
Hey, doing well, Basil. Speaking about the VIX, that's what I was calling about, the TVIX. I mean, it's, barely down today.
Yeah, so now there are a couple of things. This brings me to a couple of points that I want you to make. Because I have sell modes, so let me just, for the Chapman wave methodology, I go from a sell signal, and usually I go stage by stage in templates. That is the 120-minute chart, then the daily, then the weekly, then the monthly. When I get those, it doesn't always have to be peak D. There were just tons of Ds. Here's a peak E in the TVIX. But mostly there were Ds that were in just all over the show. The semis, the Qs, the Dow, the S&P was, I think it was F, and then the last one was a D. When I get that, then what I like to say is, if the weekly chart goes from a sell signal, so it gets upgraded, and this is not a projection. It is like when some people say a 20% pullback is more than a correction in the market. So they've got these definitions. For me, the definition of something deeper than just a sell signal is a sell mode. It usually implies that you're going to go down pretty steeply. And if it's going up, it means that at least the minimum, you're going to get a peak D. So in that case, it's a projection, but on the downside, it's more an explanation of where you are. So here we go. We've got the TVIX trading at $10.20. The day is young, as we know. I can assure you, if there, oops, I'm going to sneeze again. Oh, nope, didn't sneeze. If the Dow has a sudden spurt of 200 points, this VIX, the TVIX and the VIX are going to pull back pretty sharply. But so far, especially if you look at the monthly chart, if you don't mind, I'm just going to go to the VIX index because most people would be looking at something like the VIX to give them a sense of what's going on. It is held close to or above the 9-period exponential moving average and over the 200 period consistently since the breakout on the week of the 2nd of February. That is really unusual. I'm going to show something very interesting. Can you hold on, Dan?
Love to, sure.
Okay, good. We'll be back with Dan in Atlanta. We're talking about the volatility index trading just down a little bit when you think about what the Dow is. I'll be right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Hi folks, we're back with Dan in Atlanta, and what we're really looking at here is a very long-term, I shouldn't say very long-term, let me make it very long-term, there we go. A very long-term look at the volatility index weekly chart. And what you can see is that there was a cluster of higher highs above this orange line right here in the 200-period exponential moving average back in the period going to late 2014 to 15. That's where the market pulled back as well. Remember that August 15 pullback. So what we've got here is the August of 2015 pullback from right here with a China plunge at 53.29 in leg D, peak D made on the week of August the 28th of 2015. Huge move to the upside, and then it pulled back, and then again over that period of in December going to January, China and global fears, Fed rate fears, all sorts of things, back into the week of the 22nd of January, and that's where we had that big pullback in the Dow and the S&P. So holding here is saying to me that the intermediate term sell mode that I've got in most of the indices, key indices, is really being confirmed by the volatility index holding pretty high. I think that's what you wanted to mention, is that the VIX is actually historically in a higher range than normal, but it has been there before. But when it has been in this range, usually the market is pretty volatile. That's kind of what you're looking at, right?
Yeah, no, exactly. No, I know that, listen, there's maybe some news-driven events with Syria announcements coming up, I believe, by tomorrow or some nonsense like that. Yeah, I did want to see what your thoughts were about an entry point. Usually what I do on the TVIX is just put in a limit order and leave it in there until it gets filled. I was thinking about 930s.
So what you would like is for this particular rally, if we can see some kind of spike to the upside in the indices, the stock indices, then the VIX should pull back. And if it pull back, you're thinking, well, if that's the case, the next big pullback in the market should see the volatility index spike. What I'm going to say to you is, if there is a move in the Dow, it's at 24,343. The S&P is at 2648. If there is a move of about 200 to 250 points in the Dow on the upside, there's a chance that we could actually hold a little longer. So I'm not inclined to do that. I know that it's also very easy to miss, as we did this morning, a perfect entry by 1 penny. But I'm prepared. You know, the market offers you enough opportunity that you can grumble and mumble and say, oh, well, but I would rather say to you, if you are around. If you're not around, you don't have much choice. But if you're around, if the VIX pulls back underneath the low that was made on, whoops, what was that? On the 5th, and that low was 920, there's a chance it could hang around that area for a few days, because the market, if the market actually holds a 250-point rally from here, in other words, if the Dow gets to 24,700s and the S&P goes to 2710, maybe 2715, that could bring in more buying. So I don't want to just give you a number because it's such a volatile instrument. What I would rather say is, yeah, keep your eye on under the 930s. If we can go to the 910 area, that's where you want to be watching it. But to put in a price, you might.
I do understand.
You might want to put a price in mentally and then say, where would my stop be? And then suddenly say, you know what? I'm going to put a price in at my stop. In other words, give yourself the maximum leeway to be wrong, because that's kind of, sometimes that happens to me. I know subscribers often joke about it. Sometimes the stop I put in is actually the entry point or the exit point. So if you do the homework and you're looking at maybe 930, then you might want to say, you know what? I would want to stop. I don't know what kind of stop you would use. I wouldn't use more than a 30-cent stop on a VIX TVIX. Probably I'd make mine much, much less than that. But I'm just saying, think about it that way. So that's if you aren't around and you just want to put in a bid. My thinking is, hold off, have a little patience. I think we got a couple of days. I hope we have a couple of days. I want to see a bit more of a rally. I want to reinstitute my Dow short position. So I'm kind of in your camp looking for a short position. And I would be using the VIX TVIX kind of as a clue, and the VIX. VIX holding right now, it's even less. It's down only 18 cents. I hope we do get a bounce in the market, but this VIX is saying, you know what? A lot of people are kind of afraid, and they're buying insurance. So that I'm just saying to you, I'm not sure I would put in a fixed price, because you could be in and out within 30 seconds. I don't have to tell you that. You know, right?
Yeah. No, usually, generally what I do, I'd put in a half order at first entry, and then usually where I would consider a stop, I'll make a determination if I want to pick up or step out and let the stop get taken out. So.
Oh, okay, perfect. I'm with you there. That's good. I think anybody who knows about these volatile instruments knows that you could put a bid in, the bid could be hit, and your stop could be hit almost like in the same move, because they move so quickly. You know that, so I don't have to tell you. Hey, thanks for calling, Dan. Good question.
All right. Take care, sir.
You too. So, folks, a couple of questions came in. What about Caterpillar? Caterpillar, you know, I can see Caterpillar having a pretty nice rally, just shorter term, but I think lower lows and lower highs for a little bit longer. I think that's UTX. It's all these cyclicals. I think they need some time. So the question there is, what about it? What about Boeing? I just did Boeing. Deere had a slightly different chart. It was a better leader at one point when Caterpillar started to take a dive. Deere took over. Now Deere is weaker. It's already testing the 200-period moving average. In the tractor equipment, I got a feeling that this is an area that's not quite in play right now. Question about the XLF, which is the financials. At 27.75, we actually long the XLF. Let's put it this way. I wasn't sure I wanted to mess around with the Goldman Sachs and Bank of Americas and all that. I just wanted to have the index. And I think the index is going to give me good clues. And I'm not sure the index is ready now for a big move. So this is more a feeler. It's just a sense of how the index is acting. So it's above the 9-period moving. I just don't think it's going anywhere right now. So it's at 27.77. I'm expecting that it could get into this ugly candle, but I don't think it's going to break the upside. The ugly candle of the 22nd has a high of 28.45. I'm not sure it's going to 28.45 and a low of 27.56. I think it can go right into this above the candle high of the 5th, which is 28.04, just a little above that, and then we'll see. But at this point, just thinking of it more as a counter-trend bounce, if it gets stronger, then those other instruments, the components, they're going to be attractive for a bounce. Right now, they're all kind of struggling. JP Morgan, nice bounce up to at 112.47. You know, a lot more needs to happen. It's a good start. I don't think it's the real thing just yet. So, yeah, so we did that. Have a question. Yeah, I think I've covered most of the questions. I'll be back straight after this. Basil Chapman, Dow's up 390 and S&P's up 37. Be right back. Oh, we've got a caller. We'll be back with our caller ready.
There are 5 reasons traders and investors fail to spot bear markets. It's a set of 5 very specific patterns that have preceded every bear market during the last 130 years. I'm Steve Rhodes, author of Mastering Probability and the #1 market timer in the nation as ranked by Timer Digest for the S&P 500 for the last 3, 6, and 12 months. You see, timing is everything. And on Wednesday, April 11th at 5 p.m., I'm going to share with subscribers exactly how to time the next bear market. Look, the last 3 bears averaged a decline of 49%, which means you've got to earn 82% just to make your money back. Wouldn't it be easier to avoid the next bear market altogether? Sure, countless experts tell you that markets can't be timed, but what they're really saying is that they can't time the markets. So let me teach you how. Sign up for Mastering Probability by coming to the homepage of TFNN.com to begin your 30-day money-back guarantee trial membership and learn the exact tools that I use to time the markets. And if you can't attend live, don't worry, because the workshop will be archived on your members page for the next 30 days. Don't let that next bear market eat your porridge. Sign up today.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
Hi, folks. If any of you know Steve's workshops, you have one coming up tomorrow night. I highly advise that if you're interested in technical analysis, this should be a really good webinar to attend. Check out the front page of TFNN. Check out Steve's work and his webinar on Wednesday night. Let's go to Reddy in Mount Vernon. Reddy, how are you?
I'm good, thank you. Thank you for taking my call, Basil. How are you guys doing?
Yeah, very well. What would you like to look at?
I have 2 questions, Basil. I want to make it really quick. I started trading options with a budget of $100,000 last year, somewhere September, October timeline. I've been doing bull spreads, put spreads, and straddles and strangles and so on without risking as much capital. And over the time, I realized that I have accumulated positions, too many positions, like 15, 20, and I've decided to cut them short. And I've come to a point where I've decided, I think I should have a very limited portfolio where I could pay attention to every single position that I have. So I need a small suggestion from you on that.
So, okay, now there are a couple of things that I'm going to do because we've only got about a minute left. Are you able to call me tomorrow?
Yes, I can do that.
So why don't you call me? You be the first one to call tomorrow during the show, and I'll talk to you. I'll talk you through a certain process that I had to go to. My very first experiment in options, when I'd done really well in stocks, was to put on a whole bunch of positions. Then I went away to South Africa to visit my family for 2 weeks. I had no clue as to what was going on. I tried to keep up. It was impossible. I didn't get any news. When I got back, I can tell you that my portfolio had gone from pretty good to very, very small. It was just the wrong thing. I mean, it was the dumbest thing that I could ever have done. So why don't you call me tomorrow? And then I'm also going to recommend that there's a fantastic show on Think or Swim, the one that comes just before my show. They have such terrific ideas. I mean, Kevin Hinks. So let's talk about it tomorrow. I think a lot of people are kind of in your shoes. Let's talk about it tomorrow, okay?
I'll do that, Basil. Thank you so much.
I'm looking forward to it. Speak to you tomorrow. Folks, stay tuned. You've got Steve Rhodes coming up, and of course his webinar tomorrow night.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.